What if I told you that a school teacher's $100,000 savings grew to $6.6 million? You might think it's impossible, but that's exactly what happened to Sarah. It's not magic, but the power of smart investing with Fidelity funds. In this video, we're going to reveal 5 Fidelity funds that could supercharge your wealth. These aren't just numbers on a screen. They're the key to unlocking dreams, securing retirements, and changing lives. Whether you're just starting out or looking to optimize your portfolio, these funds could transform your financial future. Ready to discover how ordinary people like Sarah are building extraordinary wealth? Meet Sarah, a 30-year-old teacher with a dream. Like millions of Americans, she found herself caught in the paycheck-to-paycheck cycle, struggling to make ends meet while harboring aspirations of financial freedom. A staggering 76% of Americans live this way. Every morning, Sarah would wake up early, prepare for her classes, and head to school with a mix of enthusiasm for her students and anxiety about her finances. She loved teaching, but the weight of her situation often overshadowed her joy. One day, as she was buying supplies for her classroom out of her own pocket, Sarah realized something had to change. That evening, Sarah sat at her kitchen table, surrounded by bills and a meager savings account balance. She felt overwhelmed and uncertain about her future. How could she, with limited financial knowledge, ever hope to build real wealth? Despite the challenges, Sarah refused to give up. She spent her weekends researching financial strategies, trying to make sense of the complex world of investing. The jargon-filled articles and intimidating charts left her feeling more confused than ever. Then, a breakthrough. Sarah stumbled upon an article about Fidelity's top-performing funds. The headline caught her eye: How Ordinary People Are Building Extraordinary Wealth. As she read through the success stories, a spark of hope ignited within her. But Sarah was skeptical. She had managed to save $100,000 through years of careful budgeting and living below her means. The thought of investing such a substantial sum, her entire life savings, made her stomach churn. What if she lost it all? Yet, as Sarah explored the world of Fidelity funds, she began to see a path forward. She learned about compound interest and how time in the market could work in her favor. She discovered that many successful investors started just like her, with doubts and limited knowledge, but a willingness to learn. The turning point came when Sarah attended a financial seminar for educators. There, she met other teachers who had taken control of their financial futures through smart investing strategies. Their stories resonated with her, and for the first time, Sarah could envision a future free from financial stress. Armed with newfound knowledge and inspiration, Sarah made a life-changing decision. She committed to investing her $100,000 in a carefully selected portfolio of Fidelity funds. It wasn't easy. The fear of the unknown still lingered. But Sarah understood that this step was crucial for breaking free from the paycheck-to-paycheck cycle and building the future she dreamed of. As Sarah took her first steps into investing, she felt a mix of excitement and nervousness. She knew the journey ahead wouldn't be easy, but she was ready for the challenge. She had a plan, and more importantly, she had hope. Imagine owning a piece of every major American company. Sounds impossible, right? That's exactly what Sarah discovered with the Fidelity 500 Index Fund, also known as FXAIX. This fund became the foundation that could transform her financial future. Think of FXAIX as a financial buffet. You get a little taste of everything the market has to offer. It tracks the S&P 500, giving investors exposure to the top 500 companies in the United States. We're talking about giants like Apple, Amazon, and Microsoft, the businesses driving the American economy forward. But here's where it gets interesting. FXAIX comes with an incredibly low expense ratio of just 0.015%. For every $10,000 invested, you'd only pay $1.50 in fees annually. Why does this matter? Over time, these low fees can have a massive impact on returns. Many actively managed funds charge 1% or more, which can eat away at your profits. Let's break it down. On a $100,000 investment over 30 years, a 1% fee could cost you nearly $100,000 in potential gains. With FXAIX's low fees, you keep more of your money working for you. Sarah was impressed by FXAIX's recent performance with a 25% return year-to-date. But she knew better than to chase short-term gains. She was in it for the long haul, and that's where FXAIX really shined. Looking at historical data, Sarah saw how consistent this fund had been over time. Sure, there were ups and downs. That's the nature of the stock market. But the overall trend was undeniably upward. With all this information in hand, Sarah made a bold decision. She decided to allocate 30% of her $100,000 investment to FXAIX. That's $30,000 invested in a fund that essentially represented the heart of the American economy. Now, you might be wondering, what could this mean for Sarah's future? The potential is staggering. If we assume an average annual return of 10%, in line with historical S&P 500 performance, that $30,000 investment could grow to an incredible amount over time. Of course, Sarah knew that past performance doesn't guarantee future results. The market can be unpredictable, and there will always be ups and downs. But by choosing a low-cost index fund like FXAIX, she was setting herself up for long-term success, regardless of short-term market fluctuations. So what's the potential growth figure that had Sarah so excited? Brace yourself. Her $30,000 investment in FXAIX could potentially grow to a staggering $1.98 million in 30 years. Yes, you read that right. Nearly $2 million from just one part of her portfolio. It's a perfect example of how small decisions today can lead to huge results tomorrow. What if you could invest in not just the top 500 companies, but nearly every publicly traded company in America? This intriguing possibility led Sarah to discover the Fidelity Total Market Index Fund, known as FSKAX. FSKAX offered Sarah something truly unique, the chance to own a slice of the entire U.S. economy. If FXAIX is like fishing in a well-stocked pond, FSKAX is like casting your net into the entire ocean. This broader exposure meant Sarah could potentially benefit from the growth of up-and-coming companies that weren't yet big enough to make it into the S&P 500. FSKAX, just like FXAIX, came with an incredibly low expense ratio of 0.015%. This meant that for every $10,000 invested, Sarah would pay only $1.50 in annual fees. The power of such low cost over time allowed more of her money to stay invested and grow. As Sarah compared the historical performance of FSKAX to FXAIX, she noticed something intriguing. While both funds had performed well over time, FSKAX had delivered a compound annual growth rate, CAGR, of 12.84%. This impressive figure made her sit up and take notice. The more Sarah learned about FSKAX, the more she saw its potential to enhance her portfolio's diversification. By capturing growth from various market segments, she could potentially protect her wealth during market turbulence while still positioning herself to benefit from growth wherever it occurred in the U.S. economy. After carefully weighing her options, Sarah made a bold decision. She chose to allocate 20% of her initial $100,000 investment, that's $20,000, to FSKAX. It was a significant step, but one that felt right given what she had learned about the fund's broad market coverage and historical performance. Let's break it down. If we assume FSKAX continues to perform similarly to its historical CAGR of 12.84%, though remember, past performance doesn't guarantee future results, that $20,000 investment could potentially grow to an astonishing $726,000 in 30 years. It's important to note that this growth isn't guaranteed and the market will have its ups and downs along the way. As Sarah reflected on her decision to invest in both FXAIX and FSKAX, she felt confident in her diversified approach. She now had a stake in the growth potential of the entire U.S. stock market. It was like having a financial safety net that spanned from small startups to established giants. But Sarah's journey of discovery wasn't over yet. While she felt good about her investments in these broad market index funds, she couldn't help but wonder, was there a way to potentially boost her returns even further? Could she find a fund that offered both growth potential and a steady stream of income? Her curiosity about other investment strategies was just beginning to grow. What if you could have your cake and eat it too? That's what Sarah discovered with the Fidelity Dividend Growth Fund. As she delved deeper into the world of investing, Sarah stumbled upon a fund that promised both impressive growth and a steady income stream. It sounded too good to be true, but FDGFX, the fund's ticker symbol, caught her attention with its exceptional 27.4% year-to-date return. The real magic of this fund lies in its unique approach. Instead of just picking high-yield stocks, FDGFX targets companies committed to growing their dividends over time. Think of it like planting a money tree that not only grows taller, but also bears more fruit each year. This strategy intrigued Sarah, offering the potential for both capital appreciation and a growing income stream. As Sarah researched further, she couldn't believe her eyes. The fund's top holdings included familiar tech giants like Nvidia, Microsoft, and Alphabet. Wait, what? She exclaimed, nearly spilling her coffee. These weren't just dividend payers, they were leaders in innovation. It was like getting a slice of cutting-edge technology along with a steady income stream. By focusing on companies with strong fundamentals and consistent cash flows, FDGFX aims for more stable returns even during market downturns. Sarah crunched some numbers and found that a $100,000 investment could generate $1,020 in annual passive income immediately. Assuming a 5% annual increase in dividends, that income could grow significantly over time. Of course, no investment is without risk. Sarah noticed FDGFX's higher expense ratio of 0.78% compared to index funds. But for many investors, the active management approach and potential for long-term growth make it a worthwhile trade-off. After careful consideration, Sarah decided to allocate 15% of her initial $100,000 investment, $15,000, to FDGFX. It was a significant step, but one that felt right given the fund's strategy and historical performance. As Sarah reflected on her decision, she felt a sense of excitement. She was no longer just focused on capital appreciation, she was now building a portfolio that could potentially provide growing passive income over time. It was like planting a money tree that would not only grow taller, but also bear more fruit with each passing year. So what could this mean for Sarah's financial future? Let's break it down. If we assume FDGFX continues to perform similarly to its historical returns, though remember, past performance doesn't guarantee future results, that $15,000 investment could potentially grow into an impressive $322,000 in 30 years. And that's not even counting the growing stream of dividend income she'll be receiving along the way. Imagine strapping a rocket booster to your investment portfolio. That's exactly what Sarah felt like when she discovered the Fidelity Growth Company Fund, known by its ticker symbol FDGRX. This fund doesn't just aim for steady growth, it actively seeks out companies with the potential to skyrocket. FDGRX focuses on companies with above-average growth potential, often in innovative sectors shaping the future. We're talking about businesses that have the power to disrupt entire industries and create new markets. Sarah was intrigued to learn that FDGRX's top holdings included tech giants like Nvidia, Apple, Microsoft, Amazon, and Alphabet, companies at the forefront of technological innovation. The potential for high returns excited Sarah, but she also understood the risks. Investing in aggressive growth funds is like riding a roller coaster. Thrilling highs can come with stomach-churning lows. These funds can be more volatile than their conservative counterparts, as they often invest in younger, less established companies or emerging technologies. Sarah discovered something unique about FDGRX. Unlike some of her other investments, this fund doesn't pay dividends. Instead, it reinvests all profits back into growth opportunities, essentially compounding its growth potential. It's like a snowball rolling down a hill, gathering more snow, or in this case, more potential returns with each rotation. As Sarah dug deeper, she found that FDGRX had delivered an astounding 37.19% return year to date. This performance made her eyes widen. It was the type of return that could potentially turn a modest investment into a fortune over time. Of course, she reminded herself that past performance doesn't guarantee future results, but the potential was undeniably exciting. Sarah faced a challenging decision. How much of her portfolio should she allocate to such an aggressive strategy? She weighed the pros and cons, considering her long-term financial goals and risk tolerance. After careful deliberation, Sarah made a bold move. She decided to allocate 20% of her initial $100,000 investment, $20,000, to FDGRX. It was a significant step, but one that felt right given what she had learned about the fund's strategy and historical performance. If FDGRX continues to perform similarly to its historical returns, that $20,000 investment could potentially grow to an astounding $3.38 million in 30 years. It's the kind of growth that could turn Sarah's dreams of financial freedom into reality. As Sarah reflected on her decision, she felt a mix of excitement and nervous anticipation. She knew that this fund had the potential to supercharge her portfolio's growth, but she also understood that it would likely come with more volatility along the way. It was a calculated risk, one that Sarah hoped would pay off in the long run. What if I told you there's a fund that could make your money work harder without costing you a single penny? Sarah couldn't believe it either until she discovered FZROX, the Fidelity Zero Total Market Index Fund. Sarah's eyes widened as she read about FZROX's 0% expense ratio. It seemed impossible, like getting a free lunch in the world of finance. But as she dug deeper, she realized this fund could be the final piece of her investment puzzle. Launched in 2018, FZROX revolutionized the investment landscape. Experts were skeptical at first, but Fidelity proved them wrong. How did they do it? Imagine a supermarket offering a popular item at cost to attract customers who might buy other products. That's Fidelity's strategy with FZROX. It's a loss leader that benefits both the company and its clients. Sarah was impressed by FZROX's performance. With a 23.94% return year to date, it was clear that the lack of fees wasn't compromising results. She couldn't help but grin, realizing every penny of those returns went straight to investors. The long-term potential of FZROX left Sarah astounded. Her calculations showed that a $15,000 investment could potentially grow to $685,000 in 30 years, assuming similar historical returns. And not a single dollar would be lost to fees along the way. FZROX offered broad market exposure, encompassing nearly every publicly traded company in the U.S. This meant capturing growth across various sectors without the drag of management fees. Sarah also discovered that FZROX generates a steady income stream with a current yield of 1.06%. Her $15,000 investment would start generating $159 in annual dividends immediately, all available for reinvestment. As she considered adding FZROX to her portfolio, Sarah reflected on her investment journey. From feeling overwhelmed and uncertain, she now felt confident and empowered. She understood that this zero-fee fund wasn't just about saving on expenses. It was about maximizing the power of compound growth over time. With a mix of excitement and determination, Sarah made her decision. She allocated the final 15% of her initial $100,000 investment to FZROX, feeling it was the perfect complement to her diversified portfolio. As Sarah finalized her strategy, she couldn't help but wonder what other investment norms might be challenged in the coming years. She felt like she was at the forefront of a revolution in low-cost investing. But Sarah knew that her journey was far from over. She still had much to learn about managing her portfolio, navigating market fluctuations, and staying disciplined in the face of economic uncertainty. The road ahead promised both challenges and opportunities, and Sarah was eager to face them head-on. As Sarah embarked on her 30-year investment journey, she had no idea of the financial roller coaster that awaited her. Armed with the knowledge that the average investor underperforms the market by 4% annually due to emotional decisions, she made a solemn promise to herself: stay the course, no matter what. Little did Sarah know her resolve would be tested time and time again. The dot-com bubble burst of 2000 sent shockwaves through the market. While her colleagues panic sold their holdings, Sarah held steady. She even took a bold step, buying more shares at rock-bottom prices. This decision would prove pivotal in the years to come. The 2008 financial crisis presented an even greater challenge. As the global economy teetered on the brink of collapse, Sarah watched her portfolio's value plummet. Friends and colleagues urged her to sell before things got worse, but Sarah stood firm. She knew that historically, markets had always recovered, and she wasn't about to let fear dictate her financial future. During the bull markets that followed these downturns, Sarah faced a different kind of temptation. Trendy investments and hot tips seemed to be everywhere, promising quick riches and overnight success. But Sarah remembered the statistic about emotional investing and stuck to her long-term strategy. While others chased the next big thing, she focused on consistently contributing to her carefully chosen Fidelity funds. As her portfolio grew, Sarah began to experience the true power of compound interest. What started as modest gains in the early years began to snowball into substantial growth. She watched in amazement as her investments generated returns on top of returns, creating a virtuous cycle of wealth accumulation. The growing stream of dividend income from funds like FDGFX provided an additional boost to Sarah's portfolio. Instead of spending this extra cash, she chose to reinvest it, further accelerating her wealth-building journey. During market downturns, these dividends allowed her to buy more shares at lower prices, setting the stage for even greater gains when the market inevitably rebounded. As Sarah approached the 30-year mark of her investment journey, she couldn't help but feel a mix of excitement and nervousness. Had her disciplined approach and unwavering commitment paid off? When she finally ran the numbers, she could hardly believe her eyes. Her initial $100,000 investment had grown to an astounding $6.6 million, transforming her financial life in ways she never thought possible. But Sarah's journey wasn't just about the numbers. It was about the emotional growth and financial wisdom she had gained along the way. She had learned to trust in the power of long-term investing, to resist the siren call of trendy investments, and to stay calm during market storms. These lessons were just as valuable as the wealth she had accumulated. Sarah's journey from struggling teacher to multi-millionaire isn't just inspiring, it's a blueprint for financial success anyone can follow. Her story teaches us that building wealth isn't about luck or getting rich quick. It's about patience, discipline, and smart fund selection. These principles can transform your financial future, bringing security and freedom. Ready to start your own wealth-building journey? Fidelity offers funds with low expense ratios and strong historical performance, perfect for new investors. The power to change your financial future is in your hands. Take the first step today. What will your financial story be? For more investment insights, don't miss our next video on ETF portfolios. Your journey to financial freedom starts now.